This conference will now be recorded.
Okay, this is still okay. So sorry. This is not showing right. Hold on, we have an issue there. 1 second. Let me stop the recording. There's no, we're not recording. We're not canceling anything. Let me it's the headset is not showing up right. Hold on 1 second. Yeah. This is what? No, this is good. So why we're not going there? 1 second, guys. Let me make Susie an anchor. I'm coming right back. Okay, so hold on. We'll go out and come back in. Hold on. We'll make Susie. You don't. Susie, you stay. Don't move. Let me go back in and come back in. So this way I can fix the audio. Okay. Thanks. I'm One, two, three. Okay, now the audio should be good. Okay, the audio should be good now. Okay. There we go. Now it should be good, and I've got a good setting here. Yeah. This is a good headset. Yeah, I just tried to put this in. And it was charged all night. It just wasn't kicking in right. I can tell you the mic for the camera was on. That's not as good. We actually did our Princeton reunion on a go to meeting Saturday night. A couple of my buddies showed up from years ago. Wow, time is a one direction. All right, let's get into. Yeah, I will. Then I'm going. No, the recorder stopped. Oh, I see. Oh, I see what you're saying. Okay. Okay. So let me stop the record.
This conference will now be recorded.
All right. Okay. So, good morning. This is Ferry Hemsey, and it's 8:34 a.m. Running a few minutes late. On the 24th of May, 2021. This is the fourth week of May. May. So, I think next Monday is the last day, which would be Memorial Day, and then the following week we start June. Okay, we just had the expiration. What expiration that was? Wow. Okay. We are recording this video, and we're gonna go to housekeeping really quickly. We made one up improvement on our code, and over the weekend, we're starting the team setup on my own. I got clearance from Nader and Can. This way, it takes less pressure on them. Once we get the team set up, we're gonna run them together with a Skype, and then we'll cut off a Skype. But that's probably next week or two. Nancy also, I will be training her, and I will be training Susie. I have my first meeting this afternoon. It should not be very difficult. I'm told I could be able to do it in an hour. But we slowly get the push really was the code. We have an item that we're putting up on the crosses, and so it looks good. It has to do with neutrality of the trade. You'll see that. That's a good money management alert. Yeah, we added one more color to the boards. That's a yellow one. I'll explain once we get to go to meeting session for the OTF members. With this, you gotta get a killer app. It is on OTF, really managing your risk and bring it back to you in chuching after chuching. Okay. This is a lesson I learned on Friday. I should have looked at that a little bit sooner in that condition. Now I've got it color coded. Software, remember, software development never ends. There's no way. As fast as you get the software up and running and gives you some satisfactory returns, the feedback is, hey, I can do this a little bit better. And you're right, you can. So that's what we're doing. And if I get caught in a bad area, I bring an expert in, but not the black box. I give them white box to solve. So they don't have access all to detailed code, but they will have one area, work on that. Just like when we did at B2. Nobody knew the whole picture. Everybody knew a little piece. They work on their area. So, okay, let's get on the market timing here. First of all, we go to econ calendar. This is the fourth week, so we gotta have GDP, we gotta have durable goods, personal income, all this good stuff. So consumer sentiment. So let's start. Obviously, Monday is very little. National. What's this thing? This thing just came out. That's I report. There's no report. Okay, there's no data on that yet. Huh? Interesting. Doesn't have a box. Okay. Who the hell is Master? I forgot her. She's well, that's not that. I didn't mean disrespect. Master. She Loretta Cleveland. Okay. Federal Reserve Bank of Cleveland is speaking. Okay, this one showed up. Okay. Then Maynard used to be uh, vice chair. Now I guess they go out of rotation. I believe it was vice chair. Now it's just part of a board of governors. Vice chair now is Florida. Okay, indexes. Wow, wow. Oh, Murray, look at that. Wow, look at that miss. Jesus. Yeah, yeah. Okay, and then Esther George is speaking. That's Kansas City. That's tonight. And Bostic is Atlanta, correct? So we got a bunch of talking heads speaking today. Tomorrow we have Corals. Who's that? That's not what I show you. No, Randall speaking. But more importantly, Case Schiller for home index, home pricing index. Okay. FHFA again. New home sales is going to be important. Consumer confidence, not sentiment, confidence. This is a conference board. Okay. These are tomorrow. So be aware of that. Yeah, this is the conference board. So 119 they're looking for, and that's the range. All right, we'll remind you again tomorrow, as always we do. EIA on the Thursday, Coral speaking. Durable goods, big day, GDP, jobless claims. So these three are going to be crucial. We're going to review them on the Wednesday. Pending home sales, maybe. Hello, I don't know. Natural gas, I don't care about that. That's a balance sheet. Forget it. And then on Friday, you got international trade, personal income, absolutely. Advanced inventories. Then Chicago PMI and consumer sentiment. Love to measure these two against each other. Confidence versus sentiment. So we'll take a look at that. Rig count doesn't matter. All right. That's the calendar for the week. Again, fourth week, a lot of durable goods, a lot of macro stuff. Okay. So and then GDP. Of course, one thing we're all going to pay attention to again, you see it on the economic news is an analysis program, not just the news, but is the jobless claims. This is a hot number right now. As it's decreasing, so it's in the right trend, but it still is very positive. So that worries me. All right, let's jump on the charts. So far, so good. Any questions for me? Morning, Nancy. Morning, Johnny. Morning, Jack. Nancy, I've got to set up a schedule with the Teams group. I figured you have a scheduling issue. I got it okay from Nader that we can set it up separately as it is and just give him the link, just like we did with Skype. So I put a call in for 5 o'clock today for me. I'll get that started and I'll pass it on to you. All right. All right. Charts. Okay. We had expiration. It was Friday. Big run up and then it closed down. So keep that in mind. We've had a big drop here. That's for 3 days and the V, and then going nowhere fast. Still in the form, especially on NASDAQ, to have a push down. Right now we're up quite a bit. Let's see. On overnight stuff. Hold on one second. Yeah, there we go. Overnight we're up 23. We were 21 before earlier this morning. I was up a little bit earlier than normal. And about 112 on NASDAQ. That's about 0.6 to 0.8% of a, 6/10 to 8/10 of a percent on the ES and NQ respectively. Now remember we're gonna have a post-expiration effect. We always do, to some degree. Sometimes a little bit more, sometimes a little bit less. So the best way to figure out where we are is like 10:30 today, Eastern. that this expiration as like it's unwind. It's unwind of the expiration. So uh, it's some of the hedges around it. Obviously, the May contracts are over, but as any hedges they had on the next forward contract, which is maybe June, that's what we need to watch, and let's see if that gets unwinded. So by 10:30, we'll see the true hand of the market here today. All right, for this week and moving forward, we came up to -9%. So again, we were a little downside on the Macron oscillator. We're ticking down on breadth trust. So I'm still of the school that the short is not bad. We just have to hold on a little bit to it. Okay. And then let me make a note here. Short, price. Okay. We need to update our charts. We've got a little bit, a tiny bit of CI plus there. You can see that it's crossed over there. It's from a weak area, both the value and the amplitude. Okay, so where we are on amplitude. This is all DSP, well, simple stuff. You pay attention to it, you get the sense of the timing we're in. So, and of course, the big move down was on the 19th, and we did get a lower reading in a down to up volume, and hold on, okay, and notice this had a little bit lower volume. We had lower price. We had lower price, better ratio. Technically, one will argue this is a buy signal. Technically, one, okay, it would. We'll see. We'll take that under advice. But remember, it's sell May and go away. I still believe this is 2 summers coming up because we had no summer last year. So the kids are going to get the parents out. The parents are going to say, "Hey, I'm going to sell and go away. Lower my beta. Not worry about it. Come back. I'll come back in September. Later, they'll see what to do." That's what I'm thinking. Okay. Now, I until proven wrong, that is, this thing starts going up solidly, then I think that the short is still good. I think we're going to still drop. Now, historically, I shared that with you guys on Friday, I think it was, or yeah, or was it Thursday? Whatever we did last webinar. Talked to my buddy at UBS. He gets pretty good, decent research. We both went to AGS Anderson School at UCLA for he did finance, I did derivatives. But it's got good data. He says every time the market is up 4 months of the year, the next 2 months are a sell. First 4 months of the year, 2 months in a sell, 2 months sideways, which is July and August, 2 months downward, September and October, and then last 2 months rallies. We're in that wedge, okay? That condition. 4 months up, 2 months down. Then the downward stops or slows down, we kind of plateau in July, August. Then we drop again. That's a leg. Not to say big moves, but they are there. It's just like E of X of each month. So the E of X is going to be negative next 2 months. This month and next month. So we have another 30 days to go. That's what he's looking at. So, and of course, people have said, "Hey, Biden crash." Listen, you can say what you want. I'm not a Biden proponent, but numbers don't lie. This is a election time. Was it November 3rd? Was it this? Or 9? No, that's actually when it was declared. But somewhere here was declared. Okay, we were at 3,400 area. Therefore, that's 700 points. The top there was 800 points. That's 8,000 points in the Dow. 800 points in the S&P. It's a 10 to 1. That's huge, Rod. Huge, Rod. To get percentages, I mean, this is all-time highs. Is it? Look how many all-time highs it said. Now, obviously, we had a pent-up demand, but that's a different problem, guys. That was done last year this time, right? We came out of March 23rd low, correct? This March 23rd low. We called it, as you recall in the webinars. We went long the next day. We captured the V bottom, but we didn't make a new high until about August. By August, we had made a new high. So definitely we recovered that drop, which was historic, absolutely historic. 38% in 5 weeks. Never had done before. 11,000 points on the Dow. So now we have new highs, rising, rising, rising. Therefore, it fits that criteria. 4 months of the year being high. And our last new high was only put in on the 7th of this month. So keep that scenario in mind, seasonality wise. Not saying we're going to repeat that, but that's how the quant guys are looking at it. Okay. Now we're going to go and see it here. We want to see if we can see that. Oh, come on. We see, huh? Oh, no. Don't tell me. You see what I did? Yeah, I hit the wrong button. Oh, sorry, guys. The best way to do is close this, do not save, okay, and then open it again. Yeah, because otherwise you really mess up your charts. DT, I need my DT back. Jack. Okay, there we go. Come on. Yes, there we go. Okay. Now we want to see where our D trender is. Now let me bring it back in here. So I'm in sequence. Okay. Yeah, we're gonna save all of this. Sorry, I gotta do this. I forget. I'm very transactional, so I forget. Too much going on. Yeah. All right. Over 50 bar. Nicely, twice retested. Okay. Trend says, well, I haven't tested my 50 bar. So you may be happy-go-lucky over there, but I may have news for you. And we have to respect this guy. This guy is big. Why? Everything we do now has a transmission component, whether we like it or not. Especially with remote, everything remote. COVID and all that, good and bad stuff. Russell is the same problem, except it's a little bit worse. Can't get over 50 bar. It comes to underneath. Boom. Now we do realize when the market gets shaky, you sell your Bauer stocks and go away faster than your solid investment grade assets. So Russell is part of that. The small caps, the 200 to 2,000 smart caps. Russell 2,000 small caps. Yeah. So watch that. We're failing there. So this could be a good tell. And where Russell goes, NDX goes. Okay. As a matter of fact, this was a tell. Right? Did not make new highs. When you're out of sync, and it's not clicking together, it's not triggering together, you got a problem. It's like you take off with a missile, you got four, burners, and one of them is not running right. So you got an issue sooner or later. So we're gonna see where that goes. Sometimes it catches up. Look, right, it did here. Okay, you put that up. That's a March 15th. Yeah, March 15th. So let's see. Yeah, see that. Is that March 15th? No, it doesn't look like March. Yes, it is. Yeah, March 15th. So you come here actually. Oh yeah, okay. So actually, that led it. Look at it. March 15th was here. That one up led this higher, and then now the other sink again. So we'll see. My worry all along, I've said this many times, was these values. These values were way, way, way too high. This value, especially here. On the 200-day, we're up 35%. That's not a joke. Usually don't last very long. Of course, that's about fairly close to the next high. And look how much lower this one was. So, but that's normal. As you go higher, it's like energy. As you go higher, you don't need as much of a pressure to hold up. So this measure will give you like a bearish divergence, but don't be fooled. It's still maintaining it. It's still around the 50 bar. We like to take a noise out by using moving averages, and they're good. And then once we want to dive into lower, we have CI, which is much better than moving average because of the lag. Okay, we went to a buy here as of Friday close. So we have buy and buy. We had a sell. That was a good sell. This is the mechanical system, one-dimensional. It doesn't take anything else into account, just price. And of course, trend following. It's trend following, just price. It doesn't have anything else in there. It doesn't have multiple indicators as a feedback. That's what we use our brain to do that. Good. Okay. Speaking of internals are neutral. You could see it, but on a rising neutral level. Okay, and pretty much Momo, it's a negative 288. Now again, a lot of this has to do with Friday. I don't know how to emphasize that more. It has. We have to see the unwind. Okay, and so a little bit crazy the first hour. Just watching. If you don't see something logical, that's unwind. Just let it be. Let it go through. Okay. VIX trading here we're a little bit to the downside. We had a couple of spikes there. We hit 4 sigma and we pulled back. Always does. Few times we go to 5, which would be another level above that. We can write the code for that and plot it. Once you get to 5 sigma, something really, really messy is out there. And that could be more than a one spike. Now, if I put it up like this, you could see that these sequential volatility cycles. Remember, they're more predictable than price. Just pay attention to them. Use sigma channels. Look for 4 and 5 sigma. The dash is a 4 sigma. Remember, it's going to be positive on the upside for volatility, which is it's the inverse assets. So you got to be negative on the return, on the asset return, not VIX return, but the S&P and Nasdaq return. Okay, same thing here. Look where we are on NDX. I'm sorry, that's Russell. NDX here. Okay, now this one's open right now. Remember, this is today. You put your cursor there, you'll see it's today, because VIX trades early in the morning. These do not. This is Friday. Yeah, that's still Friday. No need to. You don't need all of them. Just one is enough. That's the one there's a lot of activity on it. Okay, SQ Friday. We edged up a little bit. Makes sense. 144. We're still up there. If you go to the wall settings, you'll see. I mean, I'm saying the PMT, you'll see what the percent is. I don't have it on top of my head, but it's up there. Once it gets around 150, I'm going to be worried. That's a design limit, and right now it stands at 3 sigma. We're at 1 sigma right now. The skew again is the tail risk of SPX put options. Okay, and I mean it's measured. I'm sorry, it measures the tail risk of SPX based on activity in the put options. Not because you have 2 tails. This is a downside tail. As placed by the very, very big players. They look at net value. And they compute that after the close. It's the algorithm that goes through that. It's fairly complex. Don't need to know the inside per se. And I've never mastered that. I've mastered VIX because I programmed it. This is not that easy. Plus, you need a lot of data there. That's why it takes a while too. It takes about 10. They probably there's another reason too. It's probably more succinct if they have one flash value rather than throughout the day computing. So trend, I'm not going to worry about. Yes, if you have a sell here, you have a buy. I understand that. Paso will work, but it has disappointed me a few times. So not trying to put too much emphasis on it. Okay. SB2. Someone has asked me they want a template for these charts. First, and he's a happy client. He's happy with HAPI. Yeah, what do you call it? He's a pro. Yeah, he's a pro. Let's see. Let me write this thing down. Yeah, client. Now, these charts are really PMT. For you to get these, you need to know both. You need to have both packages on. That's one technical. 2, some we do not give out. I mean, this is one here snaps. I want a template for this. Not doing that. SP2 never goes out. SP2 is not part of Happy. So I explained that to him. We're not in the business of giving away the crown jewels. Some of the stuff is internal, like what we're doing on the PMT. I'm saying on the OTF charts on GoToMeeting. Those are not going to go out. But we're happy to discuss it with you. We're happy to share it with you and just come to these meetings. That's all. And they're recorded. You can watch it later. Yeah. We may have had our rendezvous point. We were that close, technically speaking, based on what you learn over the years of getting your eyes used to. Because patterns don't have to be the same patterns. There's no guarantee. There's a disorder in the order flow. And we buy and sell for a number of reasons. And then some of it becomes excessive because buying begets buying, selling begets selling. So bottom line is we're at 53. kind of neutral, no more than that. We have most likely seen our tempo, I mean, our rendezvous point. So tempo may be going up. I know what that train is trying to tell us. I understand that right there. That's about. And I understand it's SP. Yeah, so we may have to make a adjustment here. We'll see how things are today. I will make a call on that. Hold on. Make a note here. Yeah. I think though, moving forward, I gotta make a decision. Should I hold my short or switch to long? I still think we got another shock to the downside. Nothing big, but in the next few weeks in there. It could be a data. It could be uh, some firm getting into trouble. It could be exogenous. So yeah, I think what Belarus did over the weekend was not good, but they never follow instructions anyway. So okay, Treasury. Now this is okay. This I can give out. That's not a problem. Why? This indicator is open. I mean, not open. It's available to happy. This indicator, that indicator. That I can send them, but not everything. Yeah. But and it's not really a template. We just send you the file. As long as you're using, here's the key. Again, you need to have this version running because charts are version sensitive. Okay. As long as we're the same, no problem. So I can do that. Hold on. Let me create that. This is Treasury yields. Okay. All right. Let me do that. All right. Moving forward. We're done there. By the way, so you know what we did. This is what we're done. The yellow bar. I'll explain it later on today in the chat room on the DMT. Okay, let's go here. Boom. Oh, FAT. Blue Angels, way to go. All right, let's go to last chart here that we want to talk about. Boom, there we go. Now, we want to see where we are. I hate this crap. Okay, hold on. Are we going too far? 159. That's good. That's good. Okay. We came edged up a tad underneath the two lines on this scoring indicator. Again, number of stocks above 200 a day. You can run it again. Stock charts. Just like SQ, takes about an hour to be available at the end of the day. Intraday is going to throw you off really nicely. There are a couple of those available on TradeStation. I've seen before. Never played it. Never touched it. It doesn't matter. Once a day is plenty for me to look at. Sometimes I go 2-3 days to look at it. But there's a cross there that tells me we're going to come down even further on this. It's just a little bit of weakness. Nothing major. No signal here. Bottom line, no signal here right now. Because there's no this is very good for bullish and bearish divergence. I don't see anything yet. We're in line. If we're in line, that's not divergence. Yeah. Because one is following the other. So okay, overnight. What are we doing overnight? Overnight, here's our overnight. Okay. Okay. Again, look at it in percentages 0.6, 0.8. Same as we discussed earlier. And then archives are good. These were posted. We're running again. This is July contract. Okay. Any questions for me? Are we good? Okay, Michael, there's a question. Hold on one second. Let me go to. I can read there. Yes, sir. Could we be headed to a double top before a drop as a part of? Yes, sir. Very good question. Could we? Michael Becker, a member of our PMT, is asking, could we be headed to a double top before drop as a part of a longer consolidation sideways? Yes, but here's what we want to watch there. That could be a little bit confusing for us as we look at it. It would be easier if we have a lower M. That is, we go up. Okay, let's say. Let me show you a lower M. This is lower M. This one, and then that one. We go up, come down, go up, but this one's a little bit lower, and we drop. That drop is solid. It's tradable. Okay. If you make a double top, we need to wait a little bit because that's a little closer. It's not as clear. You're going to have less people coming in on the other side, either to get out or to push it down. Okay. Remember, these are monies involved. This thing moves. A lot of each bar is billions and billions of dollars, right? If it doesn't get pushed, it's not going to go anywhere. It's going to sit there, and we're going to meander like this day was. What was that? I think it was last Monday, I guess. Yeah, last Monday. So, but we were set up right. Excuse me. We're set up right now at the lower end. You could see up, down, a little bit lower. We're set up to break. Easier to detect, but yes, we could go up, touch here, fail. All the players would say, "Okay, did I told you? Okay, let's get on the other side." Now, whether they collaborate or talk to each other, they're not going to go and publicize it, obviously. But hey, I talk to my buddies, you talk to your buddies. It doesn't mean it's collusion. It's just that we're not cornering the market. We're just expressing our opinion. But by charts, we're colluding. As long as we have some technical analysis training, we know what the smarter guys are going to do based on charts. So that's a scenario we need to watch for. Okay, that we make a lower second edge, the second hump is a little bit lower as an M. But you're absolutely right. There's a possibility we get a perfect M and we still go down. Why? Failure at the new high. Yeah. So, but before that, you know what helps us? Advanced decline. Yeah, advanced decline is going to tell us earlier. Because advanced decline will turn before the price does, slightly. So we know in 2 or 3 days type of a deal, and that's what really is one of the key internals of SP2 is what's happening. And it takes a bunch of internals in, but that's the one we're looking at. That what does that say? Now that tells me not a very good story. You see that? Boom, boom. This came close. This is double top. Now it's a lot lower. Now, that value is low. Let me see what this value is going to be when we get up there, if we get up there. So if we get up to 42, 41 area, and we're still around, let's say 60, yeah, we got a pound. Yeah, because this has some advanced decline in there as one of its inputs. It has to. But it's not pure. It's massaged. Yeah. Along with a couple other inputs. Yeah, SP2 is not going to go up. We're not going to hand that out. We just not. It's too crucial, and it's one of my oldest indicators. And the only thing has moved very nicely. I've changed it very low. The least indicator is changed. It means it has a lower degree of freedom. From a design standpoint, it means that if you're doing a back testing, for example, it means that it's very robust. That means it will survive over the years. The more input you have, the more settings you have, the more restrictions you have, your degrees of freedom go up. That means you have a curve fit. So that it will work while, it will be useless, and then work while again, then becomes useless. That's not the way to trade. Okay. Excellent question, Michael. Thank you. Any other questions for me before we wrap up the recording and jump into OTF chat? Okay, ladies and gentlemen, it was a pleasure. We'll see you on Wednesday. I'm shutting down everything on this meeting, and then recording will be posted shortly. Thank you. Good trading.